Hello everyone. Now let's look at how to find out the capital gain or loss. So remember about capital assets. When we sell the capital assets, all right, we can have either capital gain or we can have capital loss. Okay, so when we sell the capital assets, we will have capital gain or capital loss. If the capital loss is more than capital gain, we say we're going to have net capital loss. And if the capital gain is more than capital loss, then we can use the capital gain to absorb the capital loss. And so we will have a net capital gain. Now let me give you an example. If my capital gain is 5,000 and I have a 2,000 capital loss. So now that means that my capital gain is more than my capital loss. So my net capital gain now will be 3,000. Okay, 3,000. Now, if my capital gain become 2,000 and capital loss is 5,000, so in this case, you will have more capital loss than capital gain. Okay, and you need to find how much is your net capital loss. All right. Now let's continue with the PowerPoint. So if you dispose your capital assets other than by selling or exchanging, it will not result in capital gain or loss. Okay, remember in accounting we learn about disposing the assets. So we can dispose the assets by selling it. We can dispose the assets by exchanging with another assets, or we can dispose the assets by retiring the assets, discarding, right? It means throw it away. So they say that if we dispose the assets, not by selling, not by exchanging, it will not give a capital gain or loss, but the recognized gain or loss, it will be only like ordinary gain or loss. Now let's look at the capital assets. So you may ask questions. So what does it mean capital assets? Okay. So under section 1221, capital assets are defined as the opposite. Okay. So they define capital assets like all assets are capital assets except for the following business assets. All right, so they define the capital assets by the opposite. So all are capital assets except these business assets. So we have first one is inventory. So capital assets, they are not inventory. They are not account receivable. They are not supplies. They are not real property used in a business like land or building. Those land and building that we use in the business, we call it. It's not capital assets. Okay. A depreciable or amortizable personality used in a business like equipment, machine, office furniture, they are all depreciable and amortizable personality, and they are not capital assets. Okay. Also, we have patents, invention, models, design, secret formulas, processes, copyright, compositions, artistic efforts created by the taxpayer. Okay. And other include US government publication, commodity, and derivative financial instruments, hedging transaction properties, and so on. Okay, so the treatment of excess capital loss over capital gain, all right, how do we treat it? So for individual, if for example you have the stock, okay, and this is a capital asset and you sell it as a loss, remember we have the individual tax return project. So if you sell the capital assets as a loss, then you will have a capital loss. Now, the government allow the individual to deduct capital loss up to $3,000 per year. Okay, so if you lost 5,000, the maximum that you can deduct for that year will be only $3,000. And the rest you can carry it indefinitely. So you can carry to the future if you are individual. Okay. What about corporation? For corporation, you cannot deduct capital loss unless you have capital gain. Okay, again, one more time. Capital loss cannot be deducted unless you have a capital gain. Okay, because the capital gain can help to absorb your capital loss. And the capital loss can carry back 3 years and forward 5 years. Okay, so if you have a capital loss, you cannot deduct it, but you can carry back 3 years and carry forward 5 years. Okay, and you can deduct it when you have a capital gain. All right. Now, what about the long-term capital gain? Okay, so the long-term capital gain includes the selling or exchanging of capital assets that you hold it for more than 12 months. We call it long-term capital gain. So when we have a long-term capital gain for individual, how do we pay tax? There will be a special tax rates, or we call it preferential tax rates on the long-term capital gain, and they are given in the tax table. Okay, it's 0%, 15%, 20%, 25%, or 28%. So if you open your tax table, there is a table for long-term capital gain or qualified dividend, the same rate. Okay, and what about the corporation? For corporation, short-term or long-term capital gain, it will be taxed as normal rate, okay, regular rate, which is 21% in 2018. Okay, so again, one more time, for corporation, short-term or long-term capital gain will be taxed as regular rate. Okay, 21% for 2018. But the good thing is that if you have a capital gain, it will help you to absorb any capital loss that you have during that year. Okay, so you can minus capital loss when you have a capital gain. Okay, so now let's look at the disposition of non-capital assets. Okay, so we say inventory, account receivable, they are not capital assets. So when we sell these non-capital assets, we will have, for example, if we have a gain, this gain will be taxed as regular rates, like 21%. Okay, is there any questions so far? Let's look at section 1231 assets. Okay, section 1231 assets. All right, so I will share you with my Excel file. So section 1231 assets are depreciable or amortizable property used in business, and normally we held it for more than 1 year. So these are the two conditions for section 1231 answers. So first, it should be depreciable or amortizable properties, and they are used in business. And the company hold it for more than 1 year. Okay, two conditions. For example, if the company has an equipment that is used in the business and is hold that equipment for more than 1 year, so that is called section 1231 assets. Okay. Another example is a land. For example, land is a property. For example, they are used in a business, and if the company hold it for more than 1 year, it also section 1231 assets, even though it's not depreciable. Another example is, for example, a machine. Okay, a machine. If the company use a machine in the business and is hold for more than 1 year, is also section 1231 assets. Okay, so if we sell section 1231 assets, okay, we're going to have section 1231 gain, or we have section 1231 loss. Now, if we have section 1231 gain, okay, this section 1231 gain, it will be treated as capital gain. Okay. And if you have section 1231 loss, they will be treated as ordinary loss. Now, this is very good because you can always deduct the ordinary loss all the time. Okay. And for capital gain, it is better than ordinary gain because capital gain, you can use it to absorb the capital loss. All right. Now let's go back to the PowerPoint again. Okay. So let's look at an example in the book. Okay. So you can open the book to page number 28. Page number 28, question number 1. Okay, let's look at question number 1. Okay, so BBB company, which manufactures industrial plastics, owns the following assets. Identify each as a capital, ordinary, or section 1231 asset. So we need to identify each of item below, which one is capital assets, which one is ordinary assets, or which one is section 1231 assets. First one, computer system used in BBB's men's office. Is it a capital asset? Now remember that capital assets is, remember, they are not inventory, not account receivable, not supply, not real property used in business, or not depreciable personality used in a business. Okay, so first one, you remember the computer. Okay, the computer system. These are the depreciable properties that we use in business, so they are not capital assets. Okay, in fact, they are section 1231 assets. Now, what about the 50% interest in a partnership organized to conduct a mining operation in Utah? So in this case, this will be a capital assets. All right. How about a heavy equipment used to mold BBB's best-selling plastic item? This heavy equipment is a depreciable asset or property, and this is used in the business, so it should be section 1231 assets. Okay, BBB's customer list developed over 12 years. Okay. Now, can you guess what is this? Is it a capital asset or is it a regular asset or is it a section 1231 asset? The answer is it should be a capital asset. Inventory of raw material used in manufacturing process. This is ordinary assets, okay? Because just now the definition is capital assets is except inventory. An oil painting of BBB's founder and the first president that hangs in the ballroom. Okay, and if you read the question, it's also said the painting was commissioned by the company from a local artist and paid for in cash. So because this this artwork is made by a local artist, it's not by the taxpayer. So in this case, this one is a capital asset. A patent developed by BBB R&D department. This one is not a capital asset. It is an ordinary asset. And finally, BBB company airplane. This airplane is used in business and is depreciable. So it should be section 1231 assets. Okay, so again, one more time. For section 1231 assets, you have to net on a gain and loss. Okay, the net gain, or we call section 1231 gain, it will be treated as capital gain. The loss, or we call it section 1231 loss, it will be treated as ordinary loss. Okay, so the treatment for section 1231 assets is very good because we have capital gain and ordinary loss. Capital gain is better than ordinary gain because we can always use capital gain to absorb capital loss. And ordinary loss is good because we can always deduct the ordinary loss. Okay, thank you so much.